I'm Matt Bishar with REITs, and I'm here in London for EPRA's annual convention. Joining me is Frank Haggerty, Portfolio Manager with Duff Phelps Investment Management. So Frank, where do you see the best real estate investment options in Europe right now?
You know, Matt, right now we see the best opportunities really in three main areas, and I'm going to focus more on the securities markets than the underlying real estate markets. And so really where we're most focused today are in European self-storage, the Nordic countries, particularly Norwegian office, and then also, thirdly, German residential is another area that we find very attractive today.
And what European markets do you see as facing the biggest challenges?
So as we've heard over the last couple of days here at EPRA, it's very clear that a number of the markets economically are challenged, politically challenged, fiscally challenged, and that obviously reverberates into the outlook for real estate in those various markets. So clearly some of the most challenged markets, Italy, Greece, Spain, are areas that we don't have as much exposure to today for those top-down macro reasons. But then also there's countries such as Switzerland, which actually have performed very well most recently, primarily because of the appreciation in the currency. And that is an area of concern for us as well, as that may backfire, and actually we're starting to see that where it might negatively impact the growth outlook for that country. And so while the securities have performed well on a US dollar basis, and that's our base currency, that is another area of potential concern in the months ahead.
And what impact has the expansion of REITs across Europe had on the commercial real estate investment market?
You know, interestingly, it has not had probably the impact, the positive impact that many would have hoped when they first came into origination. So, we saw obviously the adoption of the REIT structure in the UK and Germany as well, just in the last number of years. And it's not necessarily created the capital formation that many would have expected or hoped for at that time. Obviously, the environment's been fairly challenging since the introduction of those REIT structures. I think the initial reasons why they were brought about are still sound, and I think over time you'll see structural changes to some of those REIT structures that might facilitate further growth in the market. And so it's definitely a long-term positive benefit for the real estate capital markets here in Europe, and it's something that I expect to see grow over time. But initially I would say it's been somewhat disappointing that it's not had necessarily the positive effects that many would have hoped for initially.
Now if we could just shift back to the U.S. It's been an interesting few months there. What's your take on where U.S. REIT prices are right now, and is there still room for more growth? What do you see there?
If you look at our expectations for 2011 were that we would see potentially a 6 to 8% total return from the U.S. real estate securities market. We've obviously seen the bandwidth come into play as both upside and downside risks became evident. More recently, some of the potential downside risks have reared their head, and so we've seen a tightening in the capital markets. Risk premiums have increased more recently, and so we've seen the security prices pull back from their recent highs. But because of that, we do see some upside over the balance of the year. And so currently we're slightly below our base case expectation. We would still hold true to that. And so we see something like a high single-digit to potentially low double-digit return from U.S. real estate securities prices this year. More importantly, I would highlight that historically what we've seen is post a bear market, which typically lasts about 2 years for U.S. real estate securities, we typically see anywhere from a 5 to 7 year up cycle in the security prices. And so we still think it's early days and that we are still in that upward cycle. And so regardless of what the ultimate absolute return are from the securities this year, we still think we're somewhere about halfway through a up cycle in the security prices over the next few years.
Frank, thank you very much for joining us.
Very happy to be here. Thanks, Matt.
For more on the global real estate investment landscape, be sure to visit REIT.com as well as EPRA.com.